Good evening, VV Nation. My name is Ryan. Welcome to the channel. Now, we all saw the CPI report that came out this morning, right? I'm not surprised that it ticked up 0.5%. I'm a little surprised of the amount it ticked up. But again, the goal of the Fed is 2%, right? We're now moving away from the Fed's goal to 3%. If you've ever seen, Dr. Toledo's Stock Strategy and Common Sense, you know the three big factors that drive the stock market. And it's not the news. It's interest rates, inflation, and earnings. So tonight's video, we're going to take a look at the inflation report, look at the chart itself. I do this every time the inflation data comes out. And on top of that, I'm going to utilize the VectorVest 7 system in two indicators in particular. We've got RS, relative safety, looks at the safety of the stock mostly from a fundamental standpoint, does look at price volatility. But the second item is our CI, our comfort index. I call it the Rocky Balboa indicator. If a stock gets knocked down, how likely is it to get back up and continue to grow? Now, these are two indicators utilized, by more conservative investors to reduce risk in a risky market. And with CPI on the rise, tariffs, we all know about the news. I just thought to put you in the right direction, and these stocks I have for you tonight will do so. But I do want to give you warning with 3 red lights across the board in their color guard. The homepage of the VectorVest 7 software does not advocate buying any stocks at this time. So if you do decide to buy stocks, just know that you are buying in a downtrending market and with high volatility. The confirmed call situation is given down right now. So that means if you're more conservative in nature, maybe put these stocks in your back pocket, put them on your radar when opportunities of buying present themselves. Otherwise, enjoy tonight's presentation and let's get started. First up, we're going to start off with a CPI report. You see the data here over the last 7 years. I've said this before. I look at CPI data just like I would any other chart. So when CPI was falling, I was trying to look for a level of support, potentially where CPI can find level support here. This is where I found it around 2.5. You see the touch coming in just 0.1 off. The yellow line represents the Fed target of 2%. Now, the red lines here represent the channel or consolidation that we saw CPI stuck in. If we take a look, we see the date line coming back from July till about August. It finally broke to the downside of that. Now, CPI report came in today at 3%. That puts it right at this red line here. Any further higher will put it back in this channel. I see CPI sticking in this channel for quite some time. Now, the big concern going forward, because we all know about tariffs and things of that nature, if it ticks above 3.7%, breaking to the outside or the upside of this channel here, that would be a concern for me, and the Federal Reserve might just have to take necessary actions. Now, this being said, I always want to give you the full picture before we get into the stocks. The color guard's still red right now. I know there's some buying pressure after today's dip, but again, the trend overall is down, and with economic situations going on in the world, I am going to be a little bit more bearish or pessimistic in the market, but I do see the reason why bulls can have some optimism here with strong earnings in place. Let's take a look and see exactly what type of stocks we should be considering in this volatile market. So in tonight's video, we're going to focus on two indicators. You can see the sort here, the primary sort. Typically, this is by VST, overall value, safety, and timing. That was last Wednesday's video. This week, we're going to focus on the safety part of the fundamentals utilizing RS. But on top of that, we're going to utilize CI, our comfort indicator. It's essentially, safety from a technical aspect. These are the 10 stocks that appeared here, right? Look, nvidia, top of the list. Axon, that's been a hot stock lately. We've got Interactive Brokers, RT, that one's been taken off, 1.5. Texas Packland, US Lime and Mineral. Now I'm going to scroll over here to the right. We see the double digits when it comes to sales growth rate and earnings growth rate. See exactly why I pointed you in the direction of these 10 stocks. Now, if we scroll over to the right, diversification purposes. If we take a look at the industry, we can see, look, business services, schools, telecom, building, semiconductor, retail, financial brokers. So a very diverse list of stocks. These are great 10 stocks. If you're considering, adding stocks to your portfolio during this dip, or if we see a turnaround in the market, these might be some stocks you just want to put on your radar. Now let's get into the charts to see exactly what opportunities are presenting themselves. First up on the list, LRN. Now for all of these stocks, we're going to use a 3, 8, and 20-day EMA along with Bollinger Bands, just to give us a sense of momentum. Now below the stock chart, we do have forecasted data here. Forecasted EPS is 12 months, forecasted growth rate in earnings, and forecasted sales growth rate. Very importantly, as we go through these stocks, I want to make sure all the forecasted data is on the rise. The reason being, with all the tariffs and whatnot going on in the world, inflation creeping back up, Businesses have to take these things into consideration. I want businesses that are growing their earnings, growing their forecasted sales, things of that nature. That way I know they're going into this situation well prepared. Now LRN, I mean, from a stock perspective, nice lower left to upper right. The high was just 3 trading days ago. We see the high here. So if you want confirmation, take out the prior high. I do like buyers are in control, putting it back into the fast lane. 3 remains above the 8. So if you're a short-term trader, hey, the technical analysis is in your favor. Here's Arista Networks. Again, nice lower left, upper right. Buy ratings for the most part. We had one sell here with a gap down. Other than that, that was short-lived. We see another gap down today. Look at this big upper wick. It looks like it wants to hug this fast lane. It wants to hug the slow lane here, the bottom Bollinger Band. You can see every time it approaches this Bollinger Band here at the bottom, it typically is short-lived. So give it a couple candlesticks, wait for confirmation here. But as far as forecasted data, earnings is on the rise. The growth rate in earnings is on the decline, but still sits at 22%. So I do like that. And the sales growth rate also on the rise, ending at 20%. So double digits across the board there. Now this stock here, EME, we could see the rollover and price action here. Now as far as any kind of bottom fishing strategy, looking for a bottom, you see my level here was around 420. I've had this level here for a while. We're approaching this level. Look at it more of a zone. If I use another horizontal line, probably get a zone right in here. We see several touches right at the top of the zone. See if we get a little bit more buying pressure, but with all the moving averages in a bearish manner, and we're hugging the bottom Bollinger Band here, not a fan of buying the stock at this time. Wait for the trade to come to you. I'd like to see a little bit more buying pressure here, a little bounce off of this support before just jumping in. Now, earnings per share on the rise, growth rate and earnings on the rise. Sales growth rate did slip, but look, 27% for earnings, 15% respectively for sales growth rate. I do like the forecasted data, but again, just momentum with the technicals to the downside. Have some patience here. This actually could really turn out to be a great bottom fishing opportunity. Now we do have fixed comfort systems here. This stock starting to roll over here. Fresh sell rating today. Not a buyer right now. The dip opportunities, I do have some levels here around 335. It looks like 329. I do see some consolidation here, so I wouldn't be too surprised if price action try to find consolidation right around this zone. Looks like just shy of $400. But look, growth rate on the decline, sales growth rate on the decline, earnings per share was on the rise, but relatively flat, actually slowly declining here over the last few months. The ratings are phenomenal, but the price action of the stock and the forecasted data looks like it's starting to roll over here. This stock I'm going to pass. And again, this is the building space. A lot of the stocks that appeared here, we're in the building space. But again, with inflation on the rise, it's going to put, pressure on the Federal Reserve to cut interest rates, right? Which could potentially spur more buying. But as of right now, I don't see, the building space being the place to be. So I'm going to skip this one. Here we've got NVIDIA. I've got lines all over NVIDIA. The bottom fit in this green one here. Not too surprised, found this level of support here. The levels that I talked about in some shorts. Looks like last week or the week prior. But look, buying pressure here. I like this stock. This 129 level. This is where I see, level of resistance. But look, we broke out of that. Retested it. Buyers coming in today. If I zoom into a 3-month time span, I do like this. I know earnings is next week. I am more bullish on NVIDIA, especially if we look at the valuation. The stock we value at 154. It's undervalued right now. So I like it, especially if you got in on this dip here last week. Hopefully my videos helped you out, kind of managing that trade. You see, it only broke below this one day, right? I said be concerned of that. Now, it only broke one day. After that, bulls off to the races. They knew of that concern here. But if we look at the forecasted data, let's go back out to a year. Earnings per share on the rise. But again, look at the growth rate in earnings and the sales growth rate, right? The only reason why I'm not concerned about it, because look at the ratings. 44%, 94% for sales growth rate. And this is a multi-trillion-dollar market cap company, right? So to see these numbers on such a large company is phenomenal. The stock is undervalued. Obviously, AI is not going anywhere. Now, if we take a look at the next position here, we got Axon. Again, this is enterprise business services. Off to the races here. You can see the levels I had before. Nice retest on this level. Now, as far as this position here, if I just use a freehand line, make life much easier. As long as price action stays above this freehand line, hey, it's in an uptrend, right? We can see the price action rolling over now. Looks like the 3 converging closer to the 8. Price action right on that 20-day EMA. If I find this stock finding support at the 20-day EMA, hey, taking a nibble, I could see why you might be interested. But otherwise, we're not far from the high, and at $662 stock, the high right at $698.67. I'd look for confirmation before just jumping in, especially the growth rate and earnings here. I mean, it's on the rise, growth rate and earnings. The earnings is dropping. You can see pretty fastly over the several months here, but look at this. I mean, 27%, 32%. Not too concerned by the rollover there because the numbers are still rather high. Here we've got Sprouts Farmers. We got valuation here. The stock is overvalued, but if a stock is overvalued, I'd like to see value on the rise, which it is here. Nice bullish candlestick today. New high today. So for my momentum traders, this might be one for you. The 3 above the 8. Buy recommendation in place. Everything as far as our forecasted data on the rise over the last 12 months. Great ratings here. I mean, look, our earnings growth rate, 21%. Sales growth rate, 14%. I like what I see here. Now here we've got Interactive Brokers. You see the stock greatly undervalued here for quite some time. Price action slowly on the rise, but value slowly on the rise. Price action, though, ripping and roaring. We can see new highs, $229. Stock is way overvalued. One thing I don't like here, right? Once the stock became overvalued, look at valuation on the decline, right? We see the valuation of 157. We're currently trading at 229. This is not a price target. So what we currently feel the stock is worth. Now the earnings per share on the rise, right? Growth rate decline all 12 months here, so I don't like that. 11%. Sales growth rate, 17%. As far as an investor, I'd pass on this stock. If you're a momentum trader, hey, take out that prior high, wait for confirmation. But if we look at today's candlestick, buyers are in control. 3 remains above the 8. And we're back into the fast lane here. We're getting above this top Bollinger Band. So I do want to point that out, not so much as an investment, but definitely more of a trade if that's something that you want to pursue. Now here we have TPL, Texas Packland. Price action just diverging further and further away from our valuation. This is petroleum, U.S. royalty stock. Earnings per share, rather high earnings per share at 22%. The growth rate in earnings, 11%, and the sales growth rate sits at 10%. Now, sales growth rate, pretty flat, but is higher than it was 12 months ago. As far as this stock, you see a lot of consolidation here. Let's zoom into 3 months time span. Yes, all the moving averages converging very closely, even the Bollinger Bands. Wait for price action to break outside these Bollinger Bands, maybe even retest these Bollinger Bands to get a sense of direction, but a tight consolidation, so I don't want to jump in until investors have chosen which direction. Here's U.S. Lime and Minerals. Go back out to a year. You can see off to the races. The stock was undervalued, greatly overvalued at this point, but now the stock is becoming undervalued again, right? Now, as far as any kind of levels for, retest, I'd put one right around here. Somewhere in here, you see we just entered this level here right around $100. The momentum's very strong to downside. Wouldn't suggest anyone just jumping into this position. The sell rating is in place. But if we see any buying pressure, a pivot as well, we can just put a freehand line. You see a nice steady downward trend line, maybe even a break in this downward trend line, just to show that the bulls are starting to take control. Now, again, don't forget about this stock because I have a feeling this stock's going to do big things here in the near future, but you can see the stock just on the decline right now, way overvalued, but now that price action from an investor standpoint is looking good. Now, if you're trading this stock, obviously I'd be a little bit more bearish and bullish, but right now, while in the zone here, it looks like 101 to about 97, let price action, break out either way to get a sense of direction. Now, as far as the forecasted data, above 20% respectively in both categories with earnings and sales growth rate, as well the forecasted earnings per share on the rise. This is a stock you just want to have on your radar. Let the trade come to you. Have some patience here. This might actually be a big winner in the second half of 2025. Now, I hope you guys enjoyed tonight's presentation, the Wednesday's videos. I'm going through the indicators here to show you kind of, what these indicators are, what type of stocks they bring up. Last week was VST, the overall combination of value, safety, and timing. This week, we're comparing both fundamental safety, RS, and technical safety, CI. With all the volatility in the market right now, I just want to, put stocks on your radar that are a little bit safer than the average bear, so that way we can at least, make some money in volatile times. Now, I hope everybody enjoyed tonight's presentation. Again, my name is Ryan. Always a pleasure giving you these presentations. Everybody have a great evening, and I'll see you tomorrow night.